evening, ladies and gentlemen. Once again, as always, Miguel Magallon. And as always, President, Founder, CEO of Magallon Entertainment. Good evening, ladies and gentlemen. Good evening to all of my clients, all of my maxed out VIP subscribers listening to me tonight across the country and around the motherfucking world. Thank you guys for tuning in. And, today we had a big ass rally. And, when this rally began earlier today, I knew it. I just fucking knew it. That I was going to get about 900 phone calls. I was going to get around probably close to 6,000 text messages and probably over 20,000 emails today asking me if the bear market is over, if the recession is not going to happen now, if everything is rainbows and unicorns, if this is the first sign of a Fed pivot, and is the Fed basically telling us that we're just going to let inflation, run wild. And so to get ahead of this, I decided to just record this clip, right here, right now, and, send it out to everyone tonight. And I want to talk about it because I think a lot of you people are looking at your portfolio. I think a lot of you guys are trying to figure out what the fuck the Fed just did today and what the fuck the Fed is thinking. I mean, Jay Powell is over there. Basically, it's like he's speaking nonsense, but I'm not sure if he's doing it intentionally or they just don't understand, how much things are going to change in the coming weeks and months. And to be fair, I don't think anyone understands how much things are going to change in the coming weeks and months. But I'm going to tell you what is about to happen here in the near-term future. I'm going to tell you what's going to happen in the long term. I'm going to tell you what's going to happen in the midterm. And I'm going to tell you what's going to happen in our portfolios. So with that being said, ladies and gentlemen, you guys already know when I'm about to teach you some shit, when I'm about to educate you on shit, when I'm about to drop knowledge in this motherfucker, you already know what time it is on the podcast. Ladies and gentlemen, get the pen in the pad, get the pen in the pad, get the pen and the motherfucking pad. And get ready to learn some shit. So let's begin. I want to back up, and I want to back up about a month ago because I want to contextualize everything. You guys know context and transparency, two really important things on this podcast, because I want you guys to not only understand, what I'm doing and why I'm doing it, but also want you guys to understand, the reasoning behind it, the logic behind it, the data that supports it, right? What are we looking at? Are we looking at fundamentals? Are we looking at technical analysis? Are we using fucking Elliott wave theory? What are we doing? And why are we doing it? What is the data? What is the evidence? What is the technical analysis that we're relying on to make our decisions, within the portfolios? So I want to back up about 6 weeks ago because I think that'll help, put things into perspective and allow you guys to understand the context in which, we find ourselves in and the environment we find ourselves in and, why we are where we are today. So it was about 6 weeks ago in the middle of October, right? The Federal Reserve comes out and, the market's just going lower. And we got the inflation report, right? The inflation numbers pretty much in the middle of October. And the inflation numbers that we got in the middle of October were really important because, again, backing up before that, you guys remember, Jackson Hole, which I think was like middle of September. I think it was like middle of September, early September. That's when Jay Powell and the other Fed board members that went out there to Jackson Hole, which is basically just an event where all the institutions and money managers and all the really important people that manage a lot of money, people like BlackRock, Fidelity, Bank of America, JP Morgan, all the most powerful people in the country, they basically go out there. And the Federal Reserve comes out there and he gives their speech, and Jay Powell gives his speech on the state of the economy, what the Federal Reserve is thinking about doing, what their perspective is, and what they see happening and what they plan on doing about it. And after that, they basically go have dinner with all these hedge fund managers and mutual fund managers and index fund managers and bank CEOs and wealth managers, and you know what I mean? Like they're having business dinners with the who's who's, and they basically get to ask them a lot of questions behind the scenes in private that regular investors don't get to ask or don't get to know about, right? And so at Jackson Hole in early September, you guys remember, back in August, right? Backtracking even more now, back in August, I had you guys sell everything in your guys' portfolios, right? And if you're a client of mine, you guys know I went into your portfolio and I basically dumped everything you guys had. And I had you guys sell everything. I had you guys sell your Bitcoin. I had you guys sell out of GBTC. I had you guys sell Tesla, ChargePoint, EVgo, Proterra, whatever was in your portfolio at the time, right? I basically had you guys dump everything, sell it all. And I've said this on the podcast, especially the VIP podcast, and I've mentioned this to clients, on numerous occasions now. But I'll keep reminding you guys, like, if there's one thing that I fucked up on this year, if there's one thing that I can go back in time and change for 2022, if there's one thing that I regret and that I wish I could do over, if there was one thing I can point to and be like, that's the thing that I would do over, or that's the thing I would do differently. The thing that stands out to me was April, because it was in April of this year, 2022, when the Federal Reserve came out. And, for those of you guys who've, been riding with me for a long time, for like 2 years, 3 years, 4 years or whatever, you guys remember, like, to begin the year, right? And I feel like I just keep going further back in time now, but to begin the year, right? I said, look, we're going into a higher interest rate environment, right? And this is when Tesla was like 400 and Bitcoin was like 50,000 and ChargePoint was like 25, 30. Like, you go back to the beginning of the year and, stocks were really high. Bitcoin was obviously way higher. And the only thing we knew about 2022 was that we were going into a higher interest rate environment, because back in November, that's what the Federal Reserve had told us in November of 2021. And again, that's important because when did Bitcoin hit its peak? When did Bitcoin finally top out and start its bear market cycle and start its biblical decline that we've been witnessing lately? When did that begin to happen? November of 2021, when the Federal Reserve literally came out and said, hey, brace yourselves, but we're going into a higher interest rate environment, because the only reason we dropped interest rates as low as they was because of the pandemic, was because we were doing lockdowns. But now that we're not doing lockdowns anymore, and no one ever talks about COVID cases anymore, and no one ever talks about hospitalizations because of COVID, now that we like never even talk about coronavirus anymore, let alone fucking lockdowns and shit, right? Now that that's not like honestly, I don't remember the last time we even talked about it in the national media. You know what I mean? Like, when's the last time we mentioned lockdowns, other than when we talk about, China lockdowns, right? But like here in the U.S., when's the last time we talked about doing a state lockdown? When's the last time we talked about, masks and enforcing the mask policy? When's the last time we talked about, vaccines? Like, we just don't talk about it in the media anymore. And we really just don't talk about it in society that much anymore either. I feel like, going into 2023, everyone's over it and we've moved on, and that's like old news. And all it was like a dark chapter in our country's history. It feels like we're just over it. It was annoying. It was stupid, and we don't want to talk about it anymore. We all have PTSD from it, and we don't want to relive those memories. But nonetheless, the Federal Reserve in November of 2021 told us, like, look, the only reason interest rates are this low was because of lockdowns, because of the pandemic, because of everything that happened, yada, yada, yada. And now that we're not focused on that anymore, and now that we're going to reopen the economy and everything's going to go back to the way things were and da-da-da-da-da, well, that means we don't have to have interest rates as low as they are, right? So the economy's been on fire. Stock market's been on fire, real estate's been on fire, crypto's been on fire, Bitcoin's, going to the moon, like everything's been, rainbows and unicorns. But you know what? It's time to start raising interest rates again, because we can't let this go on for too long, because, this is basically leading to higher and higher inflation. So we're going to start to raise interest rates a little bit, and, and we're going to have to start addressing this inflation issue. So just be prepared, as a market participant, that in 2022, we're going into a higher interest rate environment. We don't know how high we're going to raise interest rates, But what we do know is that they're going to be higher than they are now, which was like basically damn near 0%, mortgage rates sub 3%. Like, they said it's obviously going to go higher from where it is today. We don't know how high it will ultimately get to, but it's going to get to higher than it is today. And, the most important thing is that, we stabilize the market, quote unquote, stabilize the market and kill inflation. And, once we get inflation under control and once we feel like we have, price stability and the economy is working as it should, and we stop printing all these stimulus checks, which is absolutely just pouring gasoline on an already hot economy. Because honestly, the economy would have been on fire anyways in 2021 without the stimulus checks, because low interest rates and low mortgage rates have a massive impact on market dynamics and on the economy. So we didn't even need like all the stimulus checks that we printed, and I think everyone knows that by now. But when you do print as many stimulus checks as you do, and then on top of that, you throw in things like, boosted unemployment, where motherfuckers were getting paid more not to work than they were making when they were actually working. And we let boosted unemployment run for almost 2 fucking years. You gotta be fucking kidding me. And then on top of that, you throw things like boosted unemployment, child tax credits, where we're giving everyone $250 to $350 just because they have an oopsie baby. Like, this is a lot of money we were throwing on an economy that was already on fire because interest rates and mortgage rates were so fucking low. So again, I think looking back in hindsight, right, and it's always 2020 hindsight, but looking back at things, the economy would have been just fine, and it would have probably still been on fire regardless if we had thrown stimulus checks at the economy or not, because that's how much of a massive impact and domino effect that low interest rates and low mortgage rates can have on the U.S. consumer, the U.S. companies, small businesses everywhere, and on a lot of different parts of the market. But when you do throw stimulus after stimulus after stimmy after stimmy after stimmy after stimmy at every single American, and you just throw it around like helicopter money, and you're just throwing it everywhere, and you're giving everyone $1,400 here, $700 here, $900 here, $1,200 here, and then you also have the states like California that just don't stop sending out state stimulus checks. I think California's done like 6, 7, 8, 9 stimulus checks already. You gotta be fucking kidding me, America. I mean, no mames, these motherfuckers are just throwing money around like it fucking grows on trees. But when you're in California, I guess you do what the fuck you want. I mean, I'm not going to talk about Governor Newsom. I mean, this dude he's on some shit. That's all I'm going to say. California politics, it's fucking ridiculous. California politics, it's a mystery to us all. I don't understand half the things they're doing. It's either incompetence or it's complete corruption. I don't know what it is, but it's one of the two. Either they're all morons or they're all fucking evil geniuses. But these motherfuckers are doing some crazy shit in California, and I just don't understand how these people keep getting reelected and no one ever loses their job. I mean, it's fucking insane. But anyway, story for another day. So, a lot of states stepped in and they started doing state stimulus checks too. And by the way, California is not the only state that does state stimulus checks. Other states do it too. It's just that California has done it the most. I mean, fuck. I think California has done more state stimulus checks than every other state in America put together. I mean, it's insane. It really is. Now, where did people spend that money? I don't know, because they didn't invest that money. They didn't use that money to pay off their credit cards. They didn't use that money to pay off their student loans. They didn't use that money to pay off their car payments. They didn't use that money to invest it. They didn't use that money to buy real estate. They didn't use that money to fix their credit score. I don't know what they did with that money, but it's fucking gone. And you guys know, for those of you guys who listen to my podcast every night, you guys know, what do people spend all that stimulus checks on? Stupid shit after stupid shit after stupid shit. But, whatever. Like I said, I hate to sound like an asshole, but some people, I mean, they're just going to be poor forever. There's just no way around it. It doesn't mean they're bad people. It doesn't mean they're assholes. It doesn't mean that, they're not that good people to be around. It just means they're really dumb with money. It means that they have really bad spending habits and they have zero investing habits. It just means that they focus more on the weekend than they do on their financial future. That's all it really means. But nonetheless, I mean, where did all that stimulus checks go? That's where it went to. Not just the federal ones, by the way. I'm talking about the state ones as well. Because again, California just never stops sending stimulus checks. I mean, it's fucking asinine. But anyways, so, during that time, right, the economy basically caught on fire because of low interest rates and low mortgage rates. But you throw all that stimulus checks on top of it, And that's how you take a hot economy to a fucking explosive economy. And the Federal Reserve, they realize this. They're not stupid, right? Not, like these guys aren't babosos. They understand, how economics work. Trust me. Like these guys know more about economics than, all of us combined put together, So they understand that inflation's running really hot and all these stimulus checks probably aren't helping it. And low interest rates and low mortgage rates for a prolonged period of time probably also aren't helping it either. And so they told us in November of 2021, like, hey, we're going to start to raise interest rates to help cool down inflation and to start stabilizing market prices because everything just keeps getting more and more expensive. And we talked about that, right, all year long. And inflation is starting to hit 40-year highs, which it did. And inflation even now is still really too high. But we'll talk about that in a minute. And so they said, look, we're going to start raising interest rates in 2022. Again, we don't know how high we're going to take them, but it's going to be higher than it is now. And we'll stop once we feel like we have inflation under control and we have price stability in the markets and in the economy. And the moment those words left his fucking mouth, that's when Bitcoin basically topped out. That's when Bitcoin peaked. And ever since then, it's just been downhill, 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 downhill. So to begin the year, one thing I was telling my clients and, even you guys, my VIPs, right? I said, look, we're going into a higher interest rate environment, right? And the last time we were in a higher interest rate environment was 2018, 2019. And things are different than they are then, but specifically from a stock market perspective, not an economic perspective, from a stock market perspective, I'm looking at how did the stock market perform in 2018, 2019. And, can we use that as a guide or a reference to how the stock market might perform this time when the Fed starts raising interest rates again, right? Now, again, the economy is different. The world is different. The government is different. Everything's different from 2018, 2019, right? And you can say that about any time period in America. The economy is different and the stock market's different and the world is different now compared to 2008, 2009, compared to 2001, 2002, compared to 1987, compared to 1937, right? Like, the world, is always changing. So this isn't to say that, things are the exact same way or this is the exact same setup as before. All this is to say is that the last time we were in a similar situation, not the same, but a similar situation of a Federal Reserve increasing interest rates, the last time we saw that was 2018, 2019. And yes, things are different, but are there some things that we can use or we can reference or we can use as a reference or a guide and kind of, use those as tools to help us as investors today in 2022, 2023? Well, yes, there is, right? There's some things that we can use as tools or as a guide or as a reference tool, right? And one of the things I said was, in a higher interest rate environment, some stocks are going to be really flat. Some stocks are going to continue to go higher no matter what because they just don't give a fuck. And then some stocks are going to go down because some stocks are more sensitive to interest rates than other stocks. Let me say that again. Some stocks are more sensitive to higher interest rates than other stocks. What's a good example? A good example of this would be a company like Walmart versus a company like, what's a good example? A company like KB Homes, real estate. Why would they perform differently in a higher interest rate environment with all other things being equal? If everything else is equal and the only thing that's changing in the stock market and the economy is a higher interest rate environment, the reason they perform differently is because typically, not always, typically when interest rates go higher, mortgage rates go higher. When mortgage rates go higher, all of a sudden for the demand for real estate goes lower because now people qualify for less amount of money on a home loan. And if people are qualifying for less and less amount of money on their home loan, some people are just not going to try to buy a home at all because they're basically getting priced out of their market, which is literally what you're seeing happening today in real estate. And then other people, they might still buy a home, but they're not going to buy as much home because they don't qualify for as big of a home loan, right? So a company like KB Homes, if they know ahead of time that the Federal Reserve is going to increase interest rates, and therefore there is a high likelihood that mortgage rates are going to go higher with it, well, then all of a sudden that's going to impact their business model. That's going to impact how much money they're making and how often they're making that money. So a stock like KB Homes, if you look at the stock chart 2018, 2019, KB Homes did not do well in 2018, 2019. Why? Because the consumer didn't do well, particularly consumers in real estate. Because now they either don't qualify for enough of a home loan to be competitive in their real estate market, and they basically get priced out and pushed out, again, literally what you're witnessing happening today, or they'll still buy something, but it won't be as big of a house, as big of a property, right? Which means people are making less money everywhere. So in that environment, KB Homes and Toll Booth Brothers and the list goes on, a lot of real estate companies did not do well in 2018, 2019 because they were sensitive to a higher interest rate / higher mortgage rate environment. But then you look at a company like Walmart, and Walmart basically said, we don't give a fuck. And in 2018, 2019, they didn't do that bad. You know what I mean? They outperformed relative to housing stocks and real estate stocks. Walmart outperformed all of them. Why? Because at the end of the day, it doesn't matter how high interest rates go or don't go. It doesn't matter what mortgage rates are. It doesn't matter what the job market looks like. None of that matters. Because at the end of the day, you always have to buy groceries. And where do most Americans buy their groceries in America? Fucking Walmart. Now, I'm not saying this is the way things should or shouldn't be. Again, I'm just here to tell you the way things fucking are. So Walmart, you know, they're gonna get a portion of your paycheck every single month, no matter what, because you have to buy groceries no matter what. You guys see my point? If anything, I would argue that when the economy is strong, Walmart underperforms the stock market. But the reason Walmart sometimes underperforms the stock market when the economy is strong is because when the economy is strong and consumer bank accounts are flush with money, dinero, feria, when people in America have money to spend, especially when you give them stimmy after motherfucking stimmy, then all of a sudden Americans do this bougie thing called, I don't want to eat at home anymore. I want to go out with my friends. I want to go out to the club. I want to go out to the fancy restaurant that I can't afford to go eat to. I want to go out and eat. I don't want to stay home and cook. I want to go out and have fun with my friends. I want to go out and live my life. I want to go out and have fun. I don't want to stay at home and chill. And so sometimes Walmart, when the economy is strong and the consumer is strong, whether it's because of stimulus checks or not, or boosted unemployment and child tax credit money, right? In those situations, Walmart actually underperforms the broader stock market because now people aren't going to Walmart to buy their groceries because they're going out to eat more and more often. But funny enough, during a recession, Walmart actually outperforms the broader stock market because in that situation, consumers say, shit, you know, I lost my job. I'm getting my hours cut back at work. I'm not making as much money as I used to. Things are slowing down. It's a softening. Remember that? You know, like things aren't as good as they used to be. And, you know, maybe I'm still making money. Maybe I'm not. But even if I'm still making money, I'm not making as much money as I used to make. So when the economy does slow down or soften, or, you know, in this situation, when the average consumer is just crashing, right? Because inflation's still at a really high level relative to how much they're making, and they're not getting that stimulus check anymore. Well, now all of a sudden, and then again, you know, we're seeing nationwide layoffs being announced every single month, and we're seeing a lot of people, you know, again, I think something that's underrepresented in the news is how many people are just getting their hours cut back at work. And I feel like that has just as a massive an impact on the economy as anything else. And it doesn't get talked about enough, in my opinion, because anytime you try to say, oh, these people are getting their hours cut back at work, you know, there's always somebody that says, well, at least they got to keep their job. You know what I mean? Like, there's always someone that, you know, wants to make it seem like it's not that bad. And, you know, things don't always seem bad until it's you that gets impacted. So again, there's a lot of people that they're getting less and less money every month, not because they're losing their job, but because they're getting their hours cut back at work, or they're not getting as many shifts as they used to, or they're not making as much in commission as they used to. Look at real estate agents, again, as another great example. Real estate agents today are still getting paid. They're still making money. That's not the point. The point is they're not making as much money as they used to make. And real estate agents who have a really high like standard of living and love to go out a lot and go out to the club and go out to the bar a lot, now they can't do those things as much as they used to do. And some of them, because they want to keep living that same lifestyle and they want to keep living, quote unquote, their best life, the way they fund it now and finance it is by using credit cards and loans and selling all their assets because they refuse to tone down their lifestyle. Other real estate agents say, you know what, I'm just not going to make as much this year as I made last year. And I'm either going to have to cut back my living situation, or I'm going to have to get a job doing something else because I'm just not going to make enough money in real estate this year or next year to support my family the way I want to support them or the way I need to support them. And I would actually make more money working over here instead of staying in real estate full time. And there's a lot of agents that do that as well. So again, higher interest rates and higher mortgage rates, they impact different people and different companies and different sectors of the economy differently. Because look at a company like Walmart. In that situation, when people have less money and they're making less money, and you know what I mean, like they just don't got it like that anymore because higher interest rates, higher mortgage rates, and people laying off workers and job cuts coming and hour reductions happening left and right. Well, now those people can't go out to eat as often as they used to. They can't go out to the club as much. They can't go out and party as much. Now all of a sudden, guess what they're going to do? They're going to start eating at home more. And when they eat at home more and more and more because they can't go out to the fancy overpriced, restaurant to begin with, well, guess what? Companies like Walmart are just going to make more and more money now. So that's an example right there of 2018, 2019. Again, the last time we were in a higher interest rate environment where some companies can outperform the broader stock market and other companies can underperform the broader stock market. Because again, not all companies are impacted by higher interest rates and higher mortgage rates as much as other companies are. Some companies thrive when the economy is strong. Other companies thrive when the economy is weak, right? And we understand the level of interest rates has a huge impact on how strong the economy is and how strong the consumer can be. Right? The lower interest rates are and the lower mortgage rates is, the better the economy is and the better the consumer is. Right? But when things get too expensive, the Fed will raise interest rates. And when they raise interest rates and raise mortgage rates relative to where they used to be, that's how you can slow down the consumer and slow down the economy. Again, some companies thrive when the economy is thriving, and other companies thrive when the country is in a recession. And that's why this year I told you guys, like, if you guys want to go defensive and you guys are just tired of the volatility, you guys don't like the up and down action, you guys don't like that one day the stock market's exploding, but the next day it's crashing, then the next day it's exploding, and then the next day it's crashing, and then the next day it's exploding, and the next day it's crashing. If you guys can't stand volatility and you guys just don't like, like all this up and down, if you guys just don't want to deal with it and it's just too stressful for you or it's too much of a hassle for you or it's just, it's just tough to deal with or you're tired of dealing with it, I told you guys from the jump and I'll tell you guys again tonight. If volatility is really hard for you to manage or very hard for you to handle and you understand that the more volatility you embrace, the more risk reward you embrace. But if you're not built to handle that, or you just don't want to handle that, or you're tired of handling that, and you just want to go into somewhere safe, I told you guys from the beginning, I would just go into companies that are going to thrive in a slowing economy. And I told you guys to go into names like Costco, told you guys to go into names like Dollar General, and I told you guys to really load up on a company like Dollar Tree. And if you guys want to go into a Walmart stock, you can go into a Walmart stock. And then, if you want to add a little bit of risk, I would continue to load up on charging stations because, again, in my opinion, it doesn't really matter how strong the economy is or how weak the economy is. All of these companies have already started laying off all their employees that make gas cars, and now the only thing they're hiring at their companies are engineers that help make them electric cars. And so, again, I'll remind you guys, companies like Ford and companies like GM, they've already publicly announced that by 2024, 2025, 2026, they're all going to be 100% fully electric. And then you look at a company like Tesla that just never stops fucking growing. All they are is 100% fully electric. And now we got confirmation by Elon on the latest earnings call from Tesla that in 2023 they're going to start rolling out the Cybertrucks, and in 2024 they're going to start rolling out the semi-trucks. So by the time we get to mid-decade, which is 2025, 2026, by the time we get to mid-decade, 2025, 2026, Tesla's already going to be selling not just sedans and not just SUVs, but they're going to be selling, the Cybertruck. They're going to be selling the semi-truck. And, who knows? By then, Elon's, done building his fucking robot and his robot army. So I would really look at a company like ChargePoint or any electric, charging stock. Because if you're telling me that it doesn't matter how good or bad the economy is, everything's going to be fully electric, by mid-decade and, for sure 100% by the end of this decade, then I would just keep loading up on charging station stocks because that's probably going to be the best 10-year investment you can make or one of the best 10-year investments you can make. But aside from that, in the short term, if you guys just want something defensive so you guys don't have to deal with all this volatility because, it's a lot to deal with and you have a lot of stress in your life and you understand that you're probably not going to make as much money as you would if you, stayed, in the trenches with me and you embrace the risk reward to the upside. But, if you're okay making less money and having less risk reward, but in the end you also have less stress to deal with, then yeah, I would look at names like Costco. I would look at a name like Dollar General, which I think has massive runway ahead of it. And I would look at a company like Dollar Tree. I think Dollar Tree is also going to explode, not just from now until the end of the year, but, next year as well. Because again, you're starting to see consumers continue to struggle more and more, especially as there's more layoffs, especially as there are more job cuts, and especially as there are more hour reductions. And so you're seeing, even consumers now that are spending, the only reason they're spending is because they're using all their credit cards. Like credit card spending right now is at the highest level in American history. So what happens when that credit card money runs out? What happens when they can't borrow any more money? That's when the consumer hits that breaking point, when they have no more money available on their credit limit, what are they going to do? They're going to have to start making changes. They're going to have to start making a change to their spending habits. They're going to start having to make, decisions. Am I still going to buy that expensive stuff at Walmart or Target? Or am I going to go to the 99-cent store, the Dollar Tree, the Dollar General, and buy a cheaper off-brand product over there? And I think for many Americans, they've already made that decision. And that's why companies like Dollar Tree, Dollar General, and even Walmart have basically been bragging all year that they've never had this many customers in like the last 10 years. And the last time they seen their stores this packed was what? 2008, 2009. Now again, am I saying the world is the same way? Am I saying the economy is the same way, as it was in 08, 09? Am I saying everything's the same since 2008, 2009? No. All I'm saying is there's similarities. What's the similarity? We're in a motherfucking recession. That's what it is. Again, I think the average American is in a recession. Am I saying the economy's in a recession? No, because I think certain companies in this economy just don't give a fuck, and they're continuing to grow every single day and every single year, and they're not affected by higher interest rates because they just keep growing. Their stock price might be impacted by higher interest rates, but the company themselves are not being impacted by higher interest rates, right? So a great example of that would be like cybersecurity. A lot of cybersecurity stocks are down this year, guys. But is it because the companies are going bankrupt? Fuck no. Cybersecurity, I would argue, right now, especially with what's going on in Russia, Ukraine, and what's going on with North Korea, and what's going on with Saudi Arabia, like, when you really look at what's going on around the world, I would argue cybersecurity is more important now than ever before. But the reason the stocks are down is not because the companies are going fucking bankrupt. Fuck no. The reason the stocks are down is because higher interest rates is impacting their multiples. But that has nothing to do with the actual company themselves. The companies are still making more money than ever before. And these companies, honestly, they can't grow fast enough. I mean, these companies are on absolute fire because cybersecurity is still one of the most important things that companies and governments around the world, quite frankly, can invest their capital in. It's basically a necessity to do business in America today. You cannot be a successful business going into 2023 unless you have a cybersecurity plan. If you guys don't have good cybersecurity plan and good cybersecurity defenses, your business will never grow and it will never thrive. Because all you are is one good hacker away from losing all your customer and losing all your customers' data. And that's just a fucking fact. So with that being said, that was kind of like, that was the game plan for going into this year. Was I believe some stocks were going to be very flat to sideways all year long. And I believe other stocks were going to continue to thrive and continue to grow and continue to explode because they just don't give a fuck. And maybe some of our stocks would go down a little bit, but I would probably just use that as a buying opportunity because if these stocks are 5 to 10 year investments and a higher interest rate environment is only going to last for a year, year and a half, then who gives a shit? Because we're thinking about 5 to 10 years, not 5 to 10 months. You understand what I'm saying? And so that's what I said at the beginning of the year to all my clients and to all my, my loyal subscribers. Where I said basically, look, it's going to be a very volatile year in my opinion. I was right. I was correct. And if you guys don't like volatility and you guys don't like, you know what I mean, choppy action, and you guys, you guys don't want to be on a battlefield, you guys don't want to be on a war zone, you guys just want to ride the magic school bus and get to where you want to get to, then I said, look, I would look at loading up on charging stations. I would look at loading up on defensive names like, MP Materials, because, all these electric, cars need rare earth inside their engines. And I would look at some lithium stocks like Piedmont Lithium. And I said, look at an MP Material, look at a Piedmont Lithium, look at a company like ChargePoint or EVgo, because at the end of the day, like I said, everything's going to go electric whether we like it or not. I'm not here to tell you that everything should be electric. I'm not here to tell you that everything needs to be eco-friendly and we need to fight and battle climate change and carbon emission this and carbon emission that. I'm not here to be one of those fucking, people. All I'm here to tell you is if the companies have already decided that this is the route that they're going to take, that this is the road they're going to travel, then might as well make money on that road with them. You know what I'm saying? So that's why I said if the game plan is by the middle of this decade, everything's going to be electric, and then by the end of this decade, everything's fully electric, then why not make money on the infrastructure now? Why not start investing in the infrastructure for the future today, right? And so that's why I told you guys at the beginning of the year, if you guys don't like volatility, I think stocks like an MP Material or a Piedmont Lithium, and I think Piedmont Lithium's up like 10-15% this year, no big deal. And even MP Materials, which I think is like down 20%, which really isn't that bad considering the stock market's down 20% this year. So it's basically on par with the S&P 500. But I said, look, MP Materials, Piedmont Lithium, some of the charging station stocks, I think those can be, positions you can continue to add into all year. But if you guys are worried about the economy and you guys are worried about, the average American and the average consumer in America, then I would look into some names like Dollar Tree, Dollar General, and Costco. Because at the end of the day, if people can't afford to go out and eat as much as they used to be able to go out and eat, then yeah, Costco's absolutely going to be a winner. You know what I mean? And then again, Dollar Tree, Dollar General, and then of course you want to throw in there like a Walmart, then that's fine too. And I said, are any of these stocks going to double and triple this year? No. But are they most likely going to be defensive and probably outperform the broader stock market? Yeah. Because again, the last time we were in a higher interest rate, Walmart outperformed what? The broader stock market. And they outperformed what? Companies that were sensitive to higher interest rates and mortgage rates. So that's why I said, look, some of these stocks that we own, they're probably going to be very sensitive to higher interest rates and higher mortgage rates. If you guys can withstand that volatility and continue to add into those positions because you're focused as a 5 to 10 year investor and you don't care about the next, 4 or 5 months, you're thinking about the next 4 or 5 years, then this is going to be an opportunity where any dip you see is a pull the trigger event. Any dip you see is a unload the cannon situation. Any dip you see is buy the motherfucking dip type of executive orders you're going to hear from me, right? But that's only if you're willing to embrace that volatility. Because in order to embrace that volatility, you have to have long-range vision. You have to be basically like the scout snipers I was with in Afghanistan. You have to be able to look at the target, through the forest, through the trees, and you got to always have your eyes downrange. You have to always be focused on your future 5 to 10 years from now, not 5 to 10 months from now. Right? And so if you can do that and you have the fucking, you have the huevos to withstand that kind of fucking volatility and that kind of just price action in the stock market, and you're willing to stay focused on the long term, then yeah, I would continue to add into stocks that may or may not be, sensitive to higher interest rates, but you just don't care. And so a great example of this is basically Tesla. All year long, I've been telling people that Tesla is going to be extremely sensitive to higher interest rates because Tesla, during 08-09, was one of the companies, just like most car companies, that almost went bankrupt. So the last time we were in a recession, it didn't do so well. Then in 2018, 2019, the last time we were in a higher interest rate situation, it also didn't do well. So it doesn't matter if we go into a recession or not, higher interest rates, they're not really good for Tesla, right? because it has a huge impact on auto loans as well. Because then the interest rates on auto loans goes up as well, and Teslas are already fucking expensive as is. So I said, look, Tesla's going to get impacted by higher interest rates, and therefore the stock is going to get impacted by higher interest rates. Again, you look at cybersecurity. I think cybersecurity companies are some of the fastest growing companies in the world. But guess what? Their stocks still get hammered by higher interest rates. Tesla's not immune. They're not different. So I said, look, if you're going to be invested in Tesla for the next 10 years because you're looking at what they're doing with solid state batteries, you're looking at what they're doing, growing overseas in China and Europe and Australia and broader Asia, you're looking at the robots, you're looking at the charging infrastructure, you're looking at the autonomous software, you're looking at Elon Musk, you're looking at this engineering team, you're looking at, all these different things that Tesla's working on behind the scenes. If you're super bullish on Tesla over the next 5 to 10 years, then I would say, don't worry about it, or don't even look at the price today. Just keep buying every single time you get, because you're focused on the next 5 to 10 years. Just keep buying, keep buying, keep buying, keep buying. But if you're going to be sensitive and you're going to be emotional because Tesla goes up or down 20, 30% this year because of higher interest rates, right? Then stay away from Tesla and take that money and put it into Costco. Because Costco's A, going to be defensive in a higher interest rate environment, but B, they're going to thrive if we end up going into a recession, which again, I feel the average American did and has and is, right? So with that being said, that was kind of like my outlook to start 2022. I said, look, if you guys can stomach the pain and you guys can, you guys are real ride or die subscribers and ride or die clients of mine, and you're willing to let me manage your portfolio for the next 5 to 10 years, and you're willing to help me, to allow me to lead you there, then yeah, I would say just, keep buying everything you can, because this is about 5 to 10 years, not 5 to 10 months. But if you know yourself and you're not going to be able to handle volatility, that well, and you're going to be emotional about it, and that you're very sensitive to how much your portfolio is up or down on any, day, then I would say, what, just go defensive then, because then you won't see that much volatility, and, this year is not going to have it won't take a toll on you emotionally. And that's why I said, what, go with a Costco, go with a Dollar General, go with the Dollar Tree, load up into some Walmart, and then if you want, you can start layering in some ChargePoint, MP Materials, and Piedmont Lithium. And so that was the strategy, that was the game plan, and that was my executive orders to start 2022. And so, we kept going, further into 2022, and then in April, and again, if there's one thing that I fucked up, and there's one thing that I wish I can go back and do again, was I wish I had told you guys to sell everything back in April. Because back in April is when it became clear to me that this Federal Reserve was going to send us into a recession, and this Federal Reserve was going to fuck everything up. And for the most part, I've been right. They have continued to raise interest rates higher than anyone thought possible. They've continued to push this economy deeper and deeper into a likelihood of a recession. And they've done nothing to actually solve the root cause of inflation. Because the Federal Reserve has not produced more oil. The only reason gas prices are down is because the Biden administration is basically emptying the entire strategic petroleum reserve. And they have not fixed the supply chain issues with China. If anything, the supply chain issues with China have now officially entered code red. They have not stopped the war in Russia-Ukraine. And they have not stopped rich people from spending more money than they've ever had before. But to be fair, does the Federal Reserve have any control over any of those things? No. Does the Federal Reserve have any control over China? No. Does the Federal Reserve have any control over China COVID policies, however stupid they may be? No. Does the Federal Reserve and Jay Powell have the authority to tell Putin what to do in Russia-Ukraine? No. Does the Federal Reserve have any fucking hearsay when it comes to the price of gas? No. Does the Federal Reserve have the power to make Biden stop emptying the entire petroleum reserve? No. Does Jay Powell have the authority to reinstate all of the permits for Keystone Pipeline? No. So you guys understand, to a certain degree, yeah, the Fed has no control over these things, but at the same time, they're raising interest rates. But like I told you back in April, they're raising all these interest rates through the fucking roof, but they're not actually addressing the root cause of inflation. because they're not solving the supply chain issues in China. They're not stopping the war in Russia, Ukraine. They're not producing more oil. They're not fucking fixing global issues. They're not doing anything to solve the root cause of the issue. If anything, all they're doing is making things worse, but they're not actually fixing shit. And I said it was in April when China first announced that they were going to start doing some lockdowns again because of COVID. And now here we are almost a year later, and it's gone from bad to worse to super worse to holy fuck, this country is in the middle of a fucking crisis to holy shit, we might be seeing a civil war break out in China soon. Like, if anything, since April of this year, everything in China has literally gotten worse and worse and worse and worse and worse. But back in April, that's when it became clear to me that this Federal Reserve was going to fuck everything up, because in April, when China first announced lockdowns again because of COVID, they asked them like, hey, Mr. Federal Reserve, I don't know if you saw the news, but China's doing lockdowns again, bro. That's going to cause, issues in our supply chains again, and it's probably going to make inflation go up again. But you don't have the power to stop China from doing lockdowns. So we're just curious what the Federal Reserve's game plan is on tackling inflation, if the root cause of inflation, or part of the root cause of inflation, is supply chain issues caused by these, COVID lockdowns in China. Like, you guys obviously don't have the power or the authority or the control to stop any of this, but it's causing inflation to get worse, and your entire goal is to, cool inflation and temper inflation. So how do you do that when the root cause of this issue is just getting worse and worse and worse? What do you do to solve that? Because it doesn't really feel like you guys have the ability to do anything. So what's the point of raising interest rates then if it's not really going to solve the core issue? What are your thoughts about that, Jay Powell? And Jay Powell basically goes up there and says, well, we're going to do whatever it takes. So we'll just keep on raising interest rates even more. And you know what? If, I can't speak on China, but if for whatever issue, supply chains, but for whatever issue, if inflation continues to persist because of supply chains, then we'll just raise interest rates even more again. And then if it goes up again, we'll raise it up again as well. And we'll keep on raising interest rates again and again and again until we kill inflation. And that's the moment the market started to dump and tank for the first time this year. Because that's when it was clear, like, these motherfuckers, it's either they don't understand what they're doing, or they just don't care because they have to use the tools that are available to them, and the only tool the Federal Reserve has available to them is increasing interest rates higher. So it's either they're too stupid to understand what they're doing, or they have no choice but to keep doing what they're doing. And to be honest, I don't think the answer to that really matters. Because either way, they're going to keep doing what they're doing. Again, it's either because they don't understand that they're not actually solving the issues, the core issues, the root cause of the issues, or they understand, but at the same time, they have no other choice because this is the only tool that Congress gave them. So again, to a certain extent, I don't think it matters because it doesn't change the fact that they're just going to keep doing it over and over again. So if anything, the only regret I have for all of 2022, the only regret I have is not having you guys dump everything in your portfolios in April, because that's when it became clear to me that this market is going to absolutely tank, and this economy is going to crash, and this average American is in trouble, and they're about to get slaughtered, they're about to get murdered, they're about to get annihilated. And I said it wasn't going to happen all at once. It's going to happen brick by brick, piece by piece, layer by layer. But once it's all said and done, I think the average American is going to see nothing but death and destruction, not just in their portfolios, but in their bank accounts and in their way of life. And that's just my opinion. And if there's anything I wish I could go back and do again, is have all my clients and have all my subscribers not only dump everything in their portfolios in April, but short everything in April. Because if anything, the perfect opportunity to short everything, and I know some people can say, well, the best time would have been back November of last year, bro. Not really, because the stock market still hit a new all-time high in December of last year. The only thing that topped out in November was Bitcoin, and maybe that's because Bitcoin saw what was going to happen before the rest of us did. Maybe. Who knows? But at the very least, the stock market, even though Bitcoin reacted to the news, quicker and faster, and it's, it's probably because it's more liquid, and stocks and mutual funds are ran by portfolio managers and hedge fund managers that are all a bunch of fucking morons to begin with, and yet you guys still pay them 5% a year, no big deal. But, the stock market still hit a new all-time high December of last year. And maybe, January of this year, maybe that was quote unquote the perfect time to start shorting it. But, the market went down January, February, especially after that war in Ukraine started. And, the Biden administration stopped buying oil from Russia. And I know, Keystone this, Keystone that, whatever. It doesn't matter. He's not going to change his mind about it. So some of you guys should just stop talking about it. But nonetheless, right, oil prices start to skyrocket, which does what to inflation? Makes inflation even worse. And then again, they asked Jay Powell in April as well, what about this gas thing? Now that we're not buying oil from Russia and Biden's not going to help us out with Keystone and domestic suppliers can't produce any more oil, and, the only thing we have left is to ask the Saudis or the Venezuelans for more oil. I mean, fuck, oil prices right now are skyrocketing, and therefore the price to ship everything in the country is skyrocketing, and these companies aren't going to take the loss. They're just going to roll over all this extra cost and expenses onto the consumer and make everything at Walmart more expensive. So what the fuck? How are you solving that part of inflation? And what did Jay Powell say in April? Well, we have no control over the price of oil or the price of gas in this country, which is true. But, if it causes inflation to go higher, well, then we'll just raise interest rates even more. And everyone's just slapping themselves like, fuck, dude. Higher interest rates isn't the solution to everything. Are you stupid or you just not care? Which is it? You're either stupid, which I don't think he is, or you just don't give a fuck because you have to use the tools that you have. And the only tool that you have is higher interest rates, which is why to a certain degree, I do give Jay Powell and the Federal Reserve some slack. Not a lot. I think they did fuck up this entire situation by telling us inflation was transitory to begin with. So I'm not going to act like they're right about everything. They definitely made a lot of mistakes along the way, right? They're human. But at the same time, I'm not going to say, well, the surgeon fucked up the surgery and at the same time get mad at him for not doing the surgery properly. But then I turn around and the hospital only gave him like 2 tools and said, here you go. Here's a hammer and a shovel. Try to do brain surgery. How do you do brain surgery on an economy and the only tools that Congress gives you is a hammer and a shovel? A hammer to kill you and a shovel to bury you. How the fuck does that happen? You guys see my point? So to a certain degree, I give them a little bit of slack. Not to say they didn't fuck up, from beginning to where we are now. But I mean, damn, motherfucker had really no other tools. What tools does the Federal Reserve have? How else do you slow down an economy? How else do you slow down consumer spending? How else do you slow down inflation? How else do you fucking crash an economy? What else tools do you have? Nothing. All you have is fucking higher interest rates. So, I mean, again, how do you get mad at the doctor who, really botched the surgery when the only tools he had was a hammer and a shovel? A hammer to kill you, a shovel to bury you. Okay, no wonder the patient's dead. I'm just saying, America, damn. So, with that being said, in April when he said that, and every time they asked him about inflation, or every time they asked him about China and COVID lockdowns, and every time they asked him about fucking oil prices and Keystone and this and that, and Russia, Ukraine, China, Asia, Saudi Arabia, Venezuela, and they're asking him all these questions, he's like, well, I can't really speak on that either, and I don't have the authority to control any of that, and I don't have the power to change anything. But if inflation goes higher, you know what? We're going to raise interest rates even more. And I think that really told investors from day one, this motherfucker, again, he's either stupid and doesn't realize that he's not addressing the core issue, or he understands it, but he can't really do anything else because he has his hands tied behind his back and he has no other tool, no other weapon, no other resource other than raising interest rates higher. So, it kind of cuts both ways, Some of you want to call him a dumbass and some of you want to call him, the most corrupt person on earth. I don't know. Maybe it's the middle. Maybe he's not stupid and maybe he's not, that quote unquote corrupt. Maybe he's just trying his best to do a surgery and he has no tools. I don't know what else to say. I'm trying to be nice about it, but I mean, damn, you know what I mean? I don't want to blame everything on him. You know what I mean? I can't sit here and say the reason the stock market is where it is today and the reason the economy it is where it is today is solely because of Jay Powell. Come the fuck on. There's a lot bigger things happening behind the scenes and a lot more important people that are in control, that are controlling things than him. So, anyways, So if there's one thing that I regret and there's one thing that I can go back and do over again that I wish I could, like I really genuinely wish I could, it's that, man. I wish I had told all of my clients and all of my VIPs to sell everything in their portfolio sooner, to dump everything sooner, and to short the market sooner. Because again, you guys can sit here and say the perfect time to short the market would have been January. Look at SQQQ back in January. Look at SPXS back in January. Because again, Bitcoin topped out in November of 2021 when the Federal Reserve first told us about higher interest rates, right? Again, maybe it was able to foresee things happening faster than the market did, right? Maybe it actually saw what's happening now happening sooner than everyone else did. Maybe that's why. Or, maybe it's just the market is really slow to react because there's still too many money managers, who are in charge that are charging outrageous, fees, quote unquote, management fees to their clients, even though they really suck at their jobs. No big deal. But the broader market, hit a new all-time high December of last year, honestly. So, yeah, the perfect time technically would have been January, but, I was in the camp, like a lot of people were, that, you know what, I wasn't really expecting a recession back in January of this year. Even though I do think that's when it started, I didn't really see it happening back then. My opinion back then was some stocks were going to continue to go higher because they just don't care about higher interest rates. Some stocks were going to be flat all year, and then some stocks probably go down. Again, something like Tesla. But again, if you're thinking about 5 to 10 years with Elon Musk and all the things that they're doing at Tesla, I mean, today's prices, look at Tesla stock 10 years ago and look at it today. Like, it's night and day. It's not even fucking close. It's like two different companies. And so, if they figure out all these solid state batteries and they start, automating the factories and they start building robots, and now Elon Musk is talking about building quantum computers. I mean, if this motherfucker even figures half this shit out, he doesn't even have to figure everything out. If he only figures out half of this shit, this stock can easily do another 100x from where it is today. Because again, from the IPO till today, Tesla stock is up something like 5,000% or 10,000% or something outrageous, 100,000%. So, I'm not saying it'll do it again over the next 10 years, but damn, I don't really put anything past Elon, or more specifically, I'm not going to put anything past his engineering team, because I think the smartest engineers in the world either work at Tesla or SpaceX. And that's just my opinion. You guys know my favorite company in the world isn't even Tesla. My favorite company in the world is SpaceX, because I look at everything that SpaceX is doing, and I think I try to think at night all the things that I think SpaceX will do in the future and how important SpaceX is to not just our country's future, but the future of the world. And all of, like, honestly, like, we always say, like, oh, these rocket companies are going to take us into the edge of space. But you look at a company like SpaceX that's going to start doing missions to Mars next year, and then after that, they're going to start doing missions to Jupiter and Venus. Like, when Elon says, I'm going to travel the solar system, he's not fucking lying. He fucking means it. He's literally going to travel into space. You know what I mean? And we already saw Richard Branson go into space. Now, Elon says he's going to be the one that travels through space. And I believe him. I look at some of these rocket launches that SpaceX is doing, and it's fucking mind blowing. So, like, I think the smartest engineers, in my opinion, the smartest engineers on planet Earth either work at SpaceX or Tesla. So if I have that belief, then it's not even just about Elon Musk, who I think is, one of the smartest, minds in our generation. But I look at the engineers that work beside him at SpaceX and Tesla that allow him to have the free time that he has to spend all this, stupid time on Twitter posting memes and emojis. Like, part of the reason he has that spare time is because he trusts his engineers at SpaceX. He trusts his smartest engineers at Tesla to be able to get the job done even when he's not physically in the factory or physically in the office. And that's something that he struggled with when he first started those companies. He felt like he was the only smart person there and everyone else was a dumbass on training wheels. But now, 10 years later, and these engineers are fucking rock stars, and they're some of the most sought after engineers in the world. And a lot of them always say it's because Elon trained me and showed me, like, how to be a better engineer and how to be a better fucking physicist. You know what I mean? So, it goes both ways. So, anyways, yeah, if you're looking at Tesla over the next 10 years and you look at where Tesla's been the last 10 years, again, I'm not going to say it's going to do another 5,000 or 10,000 or 100,000% run. But at the same time, if you look at everything that they're working on behind the scenes at Tesla, from robots to quantum skate to solid state batteries to quantum computers to fucking automation to semi trucks to cyber trucks to building 5 more gigafactories around the world in the coming years, maybe 10, 15 more gigafactories. You look at their ability to understand charging station infrastructure and energy storage and reusable energy, reusable batteries, reusable rockets, reusable rocket thrusters. Like, you look at all this shit that these guys are on, they're fucking next level, man. So again, they don't even have to figure out all this shit. If they only figure out half of this shit and they get half of this shit right, I think the stock can go do another 5,000% run. So with that being said, yeah, the stock probably is going to be very volatile this year. And I told you guys that back in January, February, March, April. It's going to be very volatile this year. But if you're thinking about it 5 to 10 years, then who gives a fuck? Right? Who gives a fuck? This is all just a buying opportunity of a lifetime, in my opinion, right? So anyways, but you have to be able to withstand that volatility, and you have to be able to navigate all this. So anyways, yeah, that's that. So if there's one thing I can go back though, I would have probably told you guys to short everything back in April, because I think back in April, that's when it became clear that they're going to raise interest rates more than they should. And again, they're trying to fight inflation, but they're not actually addressing the key issues or the root causes of inflation. But at the same time, they have no other tools, they have no other choice, they have no other weapons at their disposal. So if anything, I would have had you guys sell everything then, short the market for the rest of the year. And then at the end of the year, that's when I would have had you guys come back in and buy everything that you guys, owned at like 50% discount. So that way you can not only double your money shorting the market this year, but then you can double your money and then go back and buy everything that, you owned earlier this year at 50% discount. So that would basically like double, quadruple, or 10x the amount of stock that you guys used to own. And if you guys are 5 to 10 year investors and you guys can double and quadruple the amount of shares you own, that right there, that's how you build generational wealth. That's how you can, like, you know what I mean? That's how you can outperform the stock market by like multiples of a 10x or 20x, in my opinion. So that's something I wish that we, would have done, or that I wish I would have told you guys to have done. But, I missed that rotation. I missed it. And, I wish I hadn't. I wish I didn't. But I just didn't react in time. I didn't pull the trigger in time. And the market tanked so fucking fast and so fucking violently that it basically made me feel like, fuck, being a day late or being 2 days late could sometimes feel like being a year late, And, so I fucked up that one right there. I fucked up that moment. And that was the perfect moment. That was the moment we should have done it. But, I didn't have you guys pull the trigger in time, and that's my fault. And I always take that loss. And I always tell you guys on the podcast, that was the one decision I fucked up right there. And it wasn't even a bad decision. It was an example of no decision is sometimes the worst decision. Sometimes the worst decision is no decision at all. And that was a textbook example of that. But nonetheless, the market came down all the way in April and May, and everything was dirt low. And you look at everything from Bitcoin to Tesla to ChargePoint, everything back in April, May, and June was like absolute 52 weeks low. And it was garbage. It was dog shit. It was fucking pathetic. You know what I mean? It really, really was. And I think at that point I said, you know what? Things are down so much, might as well fucking just stay. Because, maybe it goes lower, maybe it doesn't, but it's already down so fucking much right now that I'm not sure it goes, any further from here. Let's just wait to see what happens. You know what I mean? And sure enough, what ended up happening? All of a sudden, June, we start to rally. July, we start to rally. August, we start to rally. And next thing you know, we go on like this 2.5 month rally where everything's just going higher and higher and higher and higher. And I'm just like, damn. And then that's when we got into that August moment, where I said this market has absolutely exploded over the last 2.5 months. I didn't think the market was going to rally at all, let alone rally this hard. But now that God has blessed us with probably the biggest, fakest rally I've ever seen this year, and everything is up so much since June, July, and now here we are in the middle of August, and everything is like fucking skyrocketing again. You know what, guys? I think this is the moment we've been waiting for, because I think this market is rallying because they don't believe the Federal Reserve has the balls to keep raising interest rates. I think they think the Federal Reserve is going to start to lower interest rates sooner than people think. And I think this market is basically trying to call, the Federal Reserve's bluff. And I think this market is absolutely on smoking some shit. And I said, you know what? I think this is a fake ass rally, but I'll gladly accept it. Because what it allowed us to do on August 16th was it allowed me to give you guys the executive orders that I wanted to give you guys on April 16th. But 4 months later, there we were on August 16th, and I said, guys, I want you to sell everything, and I want you guys to unload your portfolios. And I called up all my clients, and I told them, hey, guys, I need you to do me a favor today. I want you guys to sell everything you guys have in your accounts. Then I made a clip over the weekend for my VIPs, and I told you guys what? I want you guys to sell everything in your guys' account. And I told everyone, just dump everything. Sell, 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 sell. And a lot of you guys pushed back against me at that point, and you guys said, I don't know, but what if it goes higher? Da-da-da, da-da-da. I don't feel safe. I don't feel comfortable. What if it goes higher? Da-da-da, da-da-da. And I had to be like, hey, escúchame, güey. Hey, sell fucking everything. And that's when I told you guys to buy the SQQQ on August 16th. That was $33. And I told you guys to make it 33% of your portfolio. And then that's when I told you guys to buy the SPXS when it was $17 and make it 17% of your portfolio. And I said the other half of your portfolio you can basically leave in cash, right? And I said that's going to be my game plan starting August 16th. And I told my clients that. I told my VIPs that. I told my family that. I said 33% SQQQ at $33 and 17% SPXS at $17. Leave the other half of your portfolio in cash, and let's see how this thing plays out. And in the coming weeks and months, from August 16th to September 16th to basically October 16th, SQQQ ran all the way from 33 all the way up to almost 66, back down to 46, back up to 66, and then back down to 46. And now here we are at around like 42, 43. SPXS ran from 17 to 30, back down to 25, back up to 30, and now it's all the way back down to like 20, right? And so now the question remains, are we going to do this biblical rally that I've been telling you guys, biblical rotation that I've been talking about and telling you guys for months and months and months, or do we continue to stay short? Because one of the things that I've been telling you guys for months and months and months was that I expected a big-ass Santa Claus rally. I expected a big-ass end-of-year rally. I expected just a seismic fucking break your fucking doors off, rip your face off, explosive, megaton, colossal, nuclear type of rally to end of the year. And a lot of you guys back then said, why would the stock market rally so hard at the end of the year if you just told us the Federal Reserve is just not going to stop raising interest rates and they're just going to keep raising interest rates more and more and more and more and more? And I said, all right, this is the reason why. A, I think the Federal Reserve only increases interest rates by 50 basis points in December. I told you guys that last month and the month before. And I said the reason this is important is because the market looks at it and says, oh, they're not going to do 75 basis points anymore. Now it's only 50. Yay! That means they're almost done. And then they'll start to lower interest rates. Yay! The pivot is coming. The pivot is coming. And the bears like me will say, yeah, they just did like 5 consecutive 75-point hikes. Now they're going to do a 50, but you guys act like they're just going to do a 50 and then that's it. It's not going to be that. It's going to be a 50 with another 50, probably with another 50, and then another 50 after that. It's not going to be raise it 50 basis points, and then that's it. We're done. Fuck no. Is inflation back where it used to be? Is inflation, more importantly, is inflation today where the Federal Reserve tells you they need it to be? Because some people believe that 2% inflation target is basically impossible to achieve. And that the world has changed so much now that it's just never going to happen. There's a lot of economic economic bears, not stock market participants. These guys aren't involved with the stock market. They don't give a shit about the stock market. Bob manages their money for them, so all they care about is their mutual fund. Fuck that shit. These are economists worldwide that are saying we don't think 2% inflation will ever happen again. Like, we don't think that you're going to get to that fucking point ever again. We think that's a pipe dream. But the Federal Reserve is saying, nope, we'll just keep raising interest rates until we get there, no matter the fucking cost. So, I think the market believes, you know what? They'll do 50 basis points in December, maybe 25 next year, and then that's it. It's over. After that, they're going to lower interest rates. And then the bears like me are like, bro, what the fuck are you smoking, bro? It's not going to be 50 and then maybe a 25 and that's it. It's more likely to be a 50 on another 50 on another 50 on another motherfucking 50. And then maybe they lower interest rates at the end of 2023. But they're not going to pivot early next year. They're not going to pivot next month. They're not going to pivot on New Year's. They're not going to pivot in February. Fuck no, they're not. So I think this is where the Bulls and the Bears keep going at it. So I said, I think we only get 50 basis points in December, but the problem with that is the market won't look at it as, oh, here comes another interest rate hikes. The market will look at that as, this is the first sign of the Federal Reserve pivoting, and now it's time to start the rally. And I don't think that's why the market should rally. But there's a difference between the market should or shouldn't rally and the market will or won't rally. You guys see my point? So I think this is a situation where the market will rally. Even though it shouldn't, I think it will. Or at least I thought that. And then B, I said, I think a lot of portfolio managers are under a lot of scrutiny and criticism right now. Because I think a lot of hedge fund managers and mutual fund managers, their customer accounts are down 40, 50, 60% this year because a lot of retirees, and what do you know about retirees? Retirees are some of the biggest voters in this country. Who has the most power in this country? Voters. So a lot of retirees and a lot of mutual fund customers and ETFs and index people, a lot of these accounts are down 40, 50, 60%. You know what I mean? And now because inflation is so high and people are starting to lose their jobs and get their hours cut back at work, there's a lot of people in America who are now pulling out money out their 401ks more than ever before, because even though that money is supposed to be money they don't touch until they retire, now people can't afford not to touch it. And now there's a lot of people in America who are withdrawing money out their 401k and out their pensions and out their retirement accounts more than they've done in the last 15 years put together, last 15 years combined. So, I think there's a lot of people who are looking at these mutual fund managers and index fund managers, and they're basically asking them, like, what the fuck? Why is my retirement account down 40, 50%? Like, that makes no sense. I'm supposed to be the one that's invested in safe shit, and I'm down 50%? That makes no fucking sense to me. And so I said, I wouldn't be surprised at the end of the year if all the Bobs on Wall Street got together at a Christmas party or a Christmas dinner and said, we need to pump this market up, because if we don't, we're all going to be out of a job next year, And I know that sounds like very, it sounds very, what's a nice way to put this? It sounds, too easy to be true. But you got to remember that when you look at some of the biggest money managers in the world and some of the biggest wealth managers and biggest index fund managers and mutual fund managers in the world, if you look at like the top 10 biggest money managers in the world, they all know each other. They're all friends. They all have dinners together. They all attend the same parties. They all accept the same invitations. So a lot of these big money managers, from BlackRock to Fidelity to Bank of America to JP Morgan, you look at a lot of CEOs and a lot of these financial advisors and a lot of these advisors on the board, they all know each other and they all talk to each other. So I said I wouldn't be shocked if sometime, before the Christmas break or during the Christmas break or maybe the Thanksgiving break, a lot of these, big, money managers and money advisors come together and say, hey, it's time to pump this market up, because if we let this market come down too much, some of our guys are going to be out of work soon. So let's not make our customers too mad now, right? And so I said it's going to be one of those two things. Either the market goes up because they think the Fed raising 50 basis point is a sign of a pivot, or the market goes up because all of the people like BlackRock, Blackstone, Fidelity, E-Trade, Bank of America, JP Morgan, Citigroup, Merrill Lynch, Wells Fargo, all these fucking big ass CEOs come together and say, let's pump this motherfucker up because we're not about to be out of a job. You know what I mean? And so I said it's going to be one of the two. But because of that, I see a big Santa Claus rally happening. I see a big end-of-year rally happening. And I see a big, just colossal flood of money entering the market back half of the year. And I'm not saying it should or shouldn't be that way. I'm saying that's something I predict happening. And then after the year ends, and after, everyone's happy because we had a big end-of-year rally, that's when early next year the Federal Reserve comes back and says, okay, bitches, you guys want to rally this market? Okay, say hello to my little friend. Another 50 basis points, another 75 basis points. And that's when they bring the fucking guns out. That's when they bring the hammer out. That's when they bring the AKs, the Uzis, the Berettas, the MAC-10s, the semi-automatics. That's when the Fed starts to unload the ammo, fully automatic, extended clip, banana clips, that's when they start launching the rocket launchers. That's when they roll up in the fucking tanks. That's when they start to fire their 50 cals. And I said, you know what? I could see a situation like that happening. I really, really could. And that was kind of like roughly what my prediction was, right? A big, higher interest rate, higher interest rate, higher interest rate, big Santa Claus rally at the end for no fucking reason. And then a fucking just absolute fucking collapse at the end or early next year when the Federal Reserve realizes what they're trying to do. And so we get into October and, the market starts to rally at the end of October. Now, to be fair, we also saw a rally sometime in September. That rally lasted 2 weeks and then it died off. And a lot of you guys were like all jittery asking me if we should do a rotation then too. And I told you guys to calm the fuck down, that this market's going lower. And then we had another rally sometime in October. It lasted like a week and then it died down. And I told you guys to calm down. This market's still going lower. And then we had a big ass rally at the end of October. And it lasted probably 2 weeks. Then we went down for a little bit. And I told you guys this is why you need to calm the fuck down. And then all of a sudden we start to rally again. And again. And again. And then all the way into November 2nd, when the Federal Reserve came back out during his Fed press conference, and he said, hey guys, I'm back again. I told you guys at Jackson Hole, I told you guys back in April, I'm not going to stop raising interest rates until inflation is in control. I told you guys at Jackson Hole in September that I'm still not going to stop raising interest rates until inflation's under control. And now I'm here again, and it feels like every time I get back on this fucking stage, every time I get back on the stage, you guys keep trying to rally and pump up this market. So fuck it. Here we go again. I'm going to raise interest rates again. And I'm still not going to stop until inflation is under control. And the market went down. And I was on the podcast and I said, I told you guys. And then guess what Bob did? The market rallied again. And it started to become stressful like in early mid-November. Because I feel like me and all the other bears, we're listening to this Federal Reserve continually tell us to our fucking faces, they're going to raise interest rates, they're going to raise interest rates, they're going to raise interest rates. And even if they only raise it by 50, it's not going to be 50 and that's it. It'll be 50 on another 50 on another 50 on another 50. And if you really piss them off, they might just say, fuck it, we'll just go back up to 75 until you learn your fucking lesson. And then the bulls will be like, bro, you can't raise interest rates forever. And you can raise them all you want. You're not actually solving inflation because the root cause of inflation is out of your purview. It's out of your control. You don't control the price of gas. You don't control lockdowns in China. You don't control fucking Russia, Ukraine. You don't control anything. So you could raise inflation interest rates all you want. You're not actually solving inflation. And eventually you're going to realize that this is a lost war that you never had a chance to win to begin with. And when you realize that you can't win this war, that's when you're going to back the fuck off. Because you'll realize then, and only then, that prices are going to stay high forever. Because nothing in the world is going to get fixed anytime soon. And that's when you'll realize that raising interest rates is not helping the economy. You're just making a bad situation even worse. I'm going to be honest. I think the bulls are right. I think that is what's going to happen. But here's the thing. I don't think it's going to happen tomorrow. I don't think it's going to happen next week. I don't think it's going to happen next month. I think the bulls are right that one day the Federal Reserve, they are going to stop raising interest rates. Some people say it's going to be when they realize that they have no control over inflation. Other people who are more political than me say that they're going to do it probably at the end of 2023 no matter what. But not because they realize inflation is not under control, but because they realize that Biden wants to get reelected and Biden's going to tell him to lower interest rates so he can help him get reelected. It doesn't really matter why they do it, but I agree that they are going to do it. They will start to lower interest rates at the end of 2023. Maybe in the summer they have their aha moment and realize that they can't control inflation at all and it's completely out of their control now. Or it's because they're trying to help Biden get reelected. I don't care what your reasoning is. All I'm saying is eventually they will pivot and eventually they will stop raising interest rates because at the end of the day, I agree with the bulls. They really don't have any control over inflation because they don't have control over gas prices. They don't have control over supply chains. They don't have control over China. They don't have control over Russia and they don't have control over the world. So eventually they will fucking back down. The only thing that separates the bulls and the bears isn't the Fed pivot. It's when the Fed pivot happens. And I don't think it's going to happen tomorrow. I don't think it's going to happen next week. I don't even think it's going to happen next month. You know? So, will it happen? Yes, but it's not going to happen anytime soon. So in the meantime, in between time, what do we have? We have a situation where the Federal Reserve announced today that, hey guys, inflation's starting to come down a little bit. We'll see how it goes. But, for now, we're going to go back and we're going to do what we said. We're going to do the 50 basis points. And when we do this 50 basis points, it doesn't mean we're not going to continue to raise interest rates. It just means that the future interest rate hikes aren't going to be 75. They'll probably be 50 or below. This does not mean we're going to stop raising interest rate. This does not mean we're going to pivot. This does not mean we're going to pause. All it means is we ain't going to do 75 anymore. And we hope we don't ever have to do that again. You want to know what the bulls heard? Pivot, pivot, pivot. You want to know what the bears heard? Stupid, stupid, stupid. And we had a big rally today. So now you guys are blowing me up and asking me, okay, General, so what do we do? Is this the moment to leave? Is this the moment to do that rotation for this big-ass monster end-of-year rally that you've been calling for a while? Or is this just another fake out to the upside, and then we're going to start dumping and tanking and dumping and tanking and dumping and tanking again? What's it going to be, General? What's it going to be? And you know what I'm here to tell you? I don't know yet. I think we won't know the answer. I'm going to be honest. I don't think we'll know the answer until December 15th. Because December 15th is when the Federal Reserve comes back out again and he speaks and he raises the interest rates. Hopefully by 50. We'll see what happens. I hope for more. But that's when we'll get guidance. Because on the December 15th meeting is when the Federal Reserve will tell the stock market and tell investors and economists around the world what their game plan for interest rates are in January, February, March, and April of 2023. And they will give us the blueprint for the next 4 months. And when they give us that blueprint, that will be the official answer if this market is going to continue to explode or if this market has been absolutely smoking some good-ass weed. We're going to know on December 15th. So from now until December 15th, could the market go higher? A little bit. Could it start to tank lower again, just like we saw in September and just like we saw in October and just like we saw in early November? Yeah, it could. It could absolutely start to pull back again. So right now we're still in this range. We're still in this range where some days we're up 5%, the next day we're down 5%, the next day we're up 5%, and the next day we're down 5%. So what keeps me calm? What keeps me cool in this environment, in this moment in time where it feels like we've been sideways for a while and it feels like we're not making any money? We're not really losing any money because we're still positive on our positions. We're still positive 30, 40, 50% on SQQQ. We're still positive 20, 30% on SPXS. Our cash position is still really good right now. Bitcoin is still going lower. And I told you guys to sell GBTC. I told you guys to stay in the Bitcoin. I did say if you want to stay in Bitcoin, you can stay in Bitcoin. But if you're going to stay in Bitcoin, you better be looking at Bitcoin as a 5 to 10 year investment, not a 5 to 10 month investment. Because for the next couple of months, I do think Bitcoin probably goes lower, and it should go lower. Why? Because people need to sell their Bitcoin in order to feed their family. And if more people lose their jobs and if more companies go bankrupt and they own Bitcoin, guess what they're going to sell in order to pay the bills? Their fucking Bitcoin. So I do think fundamentally Bitcoin in the short term should go lower. Does it mean it will? Maybe, maybe not, but I think it should. So I told you guys, if you're going to stay in Bitcoin, that's fine. I don't have a problem with it at all. Just make sure if you're staying in Bitcoin, it's because you're 100% committed to holding it no matter what for 5 years and even 10 years. Because I am a Bitcoin mega bull in the long term, and I do believe Bitcoin goes into the millions at the end of the decade, right? But I'm also the same one that was trying to tell you to buy it when it was like in triple digits and nobody wanted to buy it then. I was the same one who told you to buy it during the March COVID crash and no one wanted to buy it back then. I was the same one who told you to buy it at 5,000. Nobody wanted to buy it back then. I was the one who told you to buy it at 10,000. Nobody wanted to buy it back then. But then when I tell you to sell it at 20,000, you call me a dumbass. You know what I mean? Like, it's one of those things with regular subscribers. They do shit like that. So anyways, with all this being said, ladies and gentlemen, long term, super bullish on Bitcoin. Short term, I think it should go lower. I think it has to go lower. I think it must go lower. We'll see what happens though. So what keeps me calm and what keeps me cool in this moment in time? Easy. It's the delta spread. It's the delta that I keep referencing on the podcast. It's the delta I keep talking about on the podcast. And it's the delta that I keep, referencing all the time with a lot of my clients and a lot of you VIPs and a lot of my family. And the delta is quite simple. I look at everything that I told you guys to sell, and I look at the price it is today. And then I look at everything I told you to buy, and I look at the price it is today. So I know some of you guys, I think where you guys make this mistake is, and this will be the last thing I say on this clip tonight, and it's probably the most important thing I say. Some of you guys will look at the SQQQ, and you guys will look at it and say, damn, we bought it at 33. And I want you guys to look at the 6-month chart for the SQQQ. On the 6-month chart on the SQQQ, I tell you guys to buy it at 33, it goes to 66, down to 43, up to 66, back down to 43, and now we're here at 42. Right? Okay. So you guys are looking at something that I told you to buy it at 33, and now it's, 42, 43. So we're still up $10 a share, but we used to be up more. Okay. But then, what I would do is I would say that's not the only thing you need to look at. You know what you need to look at? You need to look at Tesla stock. Because on August 16th, when I told you to sell it, it was $300. What is it today? $200. Let me say it again. I told you to sell Tesla at $300. Today, it's at $200. You guys see my point? Look at another one like ChargePoint. I think ChargePoint's one of the best investments you can make on a 10-year basis. But guess what? When I told you to sell ChargePoint, ChargePoint was what? ChargePoint was $20. Guess where it is today? $12. Also down 30-40%. Right? What's another one? EVgo, great example. Another charging station stock. Is it going to be worth more 5 years from now than it is today? Absolutely. But I told you to sell it when it was 12. Guess what? Today it's 6. You guys see my point? So everything that I told you guys to sell 2 months ago is down 30, 40, 50, 60%. And everything I told you to buy is up 20, 30%. So it's not just about how much SQQQ is up. It's not just about how much SPXS is up. It's also about how much lower is Tesla from when I told you to sell it. How much lower is ChargePoint, EVgo, Proterra, and even some of the cybersecurity stocks, I told you guys, I think cybersecurity stocks are some of the fastest growing companies in the world. Their stocks are still dog shit. Look at CrowdStrike today. Anybody seen CrowdStrike today? Let's look that up. Ticker symbol CRD. CrowdStrike is probably one of the best cybersecurity companies in the world. August 16th, the stock was trading at what? 200. Today, it's 120. There you go. Basically down 40%. So it's not just about, where SQQQ is and where SPXS is. It's where everything else is too. Because if I hadn't told you guys to sell everything and put your money in SQQQ and put your money in SPXS, your portfolio would probably be only 50. Your portfolio would probably be down another 50% from where it is today. Because if you were still in Tesla stock, your portfolio would be down 40% in the last 2 months. If you were still in CrowdStrike, your portfolio would be down 40% in the last 2 months. If you guys were still in fucking EVgo and ChargePoint, your portfolios would be down 40% in the last 2-3 months. You guys see my point? So please, for the love of God, stop looking at, what's SQQQ at? What's SQQQ at? What's SQQQ at? What's SPXS at? It's also, where's Tesla at? Where's ChargePoint at? Where's Proterra at? Where's EVgo at? Where's CrowdStrike at? Where's AMD, NVIDIA? Have you guys seen AMD and NVIDIA? I know I don't really talk about them that much because their stocks are absolutely atrocious. But, look at it. Look at NVIDIA stock right now. NVIDIA stock, I told you guys to sell it when? August 16th. August 16th, NVIDIA stock was what? 190. Today, it's what? 160. Down 10%. Meanwhile, SPXS is up 10%. No big deal, right? AMD, same thing. Look at AMD. August 16th, AMD was $100. Today, it's 75. AMD is down 25% in 2.5 months. Guess what? SQQQ is up 25% in 2.5 months. So again, for the last and final time, America, it's not just about where SQQQ is and where SPXS is. It's also about where everything else is, because everything else just kept going lower and our portfolios kept going higher. The gap between how high our current stocks are going versus how lower our old stocks are going, that's the delta, that's the gap. And right now, the gap is still big as shit. So until that gap starts to close, until that gap starts to cross, I feel really calm right now, and I feel really good, because I know that if I hadn't rotated out, a lot of our portfolios would be way lower than they are today. So the only question I have to ask myself right now is this market going to continue to rally from now until the end of the year? Or is this just another 2-week rally that's going to make everyone think that the worst is over? And then the Fed comes out and he pulls a trigger and he murders every fucking investor on Wall Street. Ladies and gentlemen, we'll find out in 2 weeks. But right here, right now, I do not feel good about this rally. If I change my mind tomorrow, if I change my mind next week, if I change my mind next month, I will let you know. I will tell you to pull the trigger. I will order an emergency rotation. And I know a lot of you guys have been waiting for it. I know a lot of you guys have already paid me, and a lot of you guys are waiting to pay me for this rotation. Trust me, if anyone wants the rotation to happen, it's me, because I'm going to get paid a lot of fucking money when we rotate, because a lot of you guys, again, have either paid me up front or you're waiting for the rotation in order to pay me. Trust me, if anyone is incentivized to do a rotation, it's fucking me. But if I do a rotation, it's because I believe it's the perfect fucking moment to pull the fucking trigger. And right now, I just don't feel that moment. If it happens tomorrow, if it happens next week, if it happens next month, I will let you guys know. But until then, I'm going to continue waiting and making money watching the fucking world burn. Ladies and gentlemen, thank you for listening.